Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and talk about where could the Tesla stock head. We're going to go ahead and combine technical analysis with fundamental analysis and do an intrinsic value calculation using a discounted cash flow statement that I personally created at alstocktrades.com. Now, what's interesting here is I was actually going to do this video earlier today, but I woke up to a copyright strike against Chamath Palihapitiya. Literally, the All In podcast, Chamath Palihapitiya, and the owner of the All In podcast YouTube channel, Jason, went ahead and attacked one of my channels or one of my videos that pretty much basically titles an explanation from Chamath that explains, why he sold the Clover Health stock, or at least a portion of it, to bring down his ownership from approximately 10% down to around 4.99%. And unfortunately, out of all the videos, that was the one taken down. It's interesting is a lot of people do videos about the All In podcast because it's open source as per David Sachs, but it's funny how they go ahead and attack that. So in this video, we're going to go ahead and switch gears and talk about Tesla. Just wanted to explain to you the drama, especially when a billionaire goes ahead and attacks a small content creating channel that helps folks thrive, retail investors thrive in the stock market. So I would really appreciate if you subscribe, comment, like, and share. Overall, back on December 22nd, 2022, before Christmas, we went ahead and we use an artificial AI model that we get from our partner software engineer trading group here, where we go ahead and literally, that's my research. We can go ahead and look at this and type in Tesla weekly, and then the AI generates a support and resistance line. So that's essentially what that is here. So let me go ahead and share with you there. So back on the 22nd, we said that, if Tesla breaks down 129, which they did, expect $94 to be the next level of support. And unfortunately, it has happened. We see that now Tesla is near $111, and it was actually went as low today as $108. So definitely over the past 5 days, Tesla has been down 19%, in a month, negative 37%, in 6 months, negative 50%, and year to date, 71%. But overall, still positive from the 5-year perspective, and still outperforming the S&P 500. But overall, negative 71%. So the goal right now is to determine when exactly, when are we going to find some support? Now, we are going to do the dark pool data analysis to look at potentially where this buy could have originated from, could have been institutions, but not necessarily I have it planned for this video. So overall, we're going to go ahead and share with you the fundamental analysis here. As you can see, if you look at the revenue, Tesla's revenue, for all the Tesla bulls that are watching this video, I don't have to explain to you, revenue has gone up. Gross margins have drastically improved. Operating income is going into the right direction. Net income is obviously now positive in 2020. Earnings per share is positive now. Shares, obviously, a little bit more shares, but still based off of the growth, minimal. Book value has increased from literally 8 pennies to $12.67. Now, again, book value is very difficult to evaluate for growth companies, but it's something that you should definitely look at. Free cash flow is where it's at. It became free cash flow positive in 2019 at around a little under $1 billion. And now we're sitting at $8.9 billion. But again, you have to understand how much of these are essentially the Bitcoin selling before Bitcoin crashed versus the actual intrinsic value of the company, which we will talk about right now. Working capital obviously headed into the right direction. So overall, what we're going to be doing is, this is pulled from Yahoo Finance. They expect that Tesla's revenue is going to be growing 37.70%, obviously different from the 50 to 71% growth rate that it's been exhibiting for the past 10 years, which we calculated from this specific data set by looking at the revenue, which we basically pulled directly from our proprietary brain machine technology that we have here at Al Stock Trades, where you can just go ahead, open up the help menu, and then type in master analysis here, click the master analysis key, type in Tesla, and then you can download the Excel spreadsheet. So that's exactly where we got that from. But overall, utilizing first what analysts expect, so I can potentially see how much is Wall Street willing to drive down this stock price. So overall, when we go ahead and do this and we go ahead and average the free cash flow from the time it turned positive to now, we get a recession case of $46, a bear case of $99, a base case of $139, and a bull case of $207. Now, again, this specific intrinsic value calculation is not so much geared to what is the value of Tesla in 10, 20 years from now. No, I just want to see what is the most bearish thing that we could see Tesla go down to. And that's just what I like to do, because it says here $46 or $99 for the bear versus recession. And if you go here, it falls in line right. The bear case, the recession here falls in line right below the $63. So it would have to really break this support line, which it already has, unfortunately. I don't know if I have an updated picture. As you can see right here, it broke the $129 support line, and now we're headed down to 94. So we'll see if that were to pick up, or maybe it might be able to bounce from there. But overall, if you look at the first analysis, it's literally near the bear recession case. Okay. So now let's go ahead, and what we're going to be doing is taking a look at from 2012, they made $114 million in revenue. We use revenue instead of net income in this analysis because they recently became net income positive. And then we went ahead, because it's a growth company more than a value company, at least at these stages. And in 2022, they're expected to make a little more, but to $74 billion. And overall, we see a recession of 258, a bear of 625, a base of $900, and a bull of $1,300, which is right around Cathie Wood's analysis. But now let's go ahead and take a look at the most extremist bullish case that Tesla could become. And that is using their current free cash flow of $8.9 billion. Obviously, these numbers aren't millions, right? But we're using the most bullish of bullish cases, assuming that they could continue with this crazy free cash flow and their growth rate, which honestly, I doubt. But yet again, I just want to know what is the bottom and what could be the top, right? And that's just my educational analysis using this theoretical approach of intrinsic value calculation. And this is what's interesting, and this is based off of the shares that we haven't changed. We could see a recession of 500, a bear of 1,300, a base of 2,000, and a bull of 3,000, which explains why Cathie Wood can come up with these crazy price targets, because if this company continues growing and continues entering spaces and dominating spaces, like, for example, what Amazon has done, then it's not just a car company. I mean, they just recently created a $300 charging hub for Apple or AirPods, which Apple never even did, because who the hell is going to buy a $300 charger, right? So there's a lot of things Tesla could enter. They have the self-driving, they have the robots, they have a lot of things. But again, a lot of these things have to go correctly, which is why I always start from the bearish to the bullish case analysis. And right now, it's all about the technicals right now, and to see how far is this recession going to go into. Okay. Exactly, Jonathan. It takes into account the Bitcoin profits, which is not this, which is why we need more time to analyze. Exactly. Yeah, you hit it right on the knob. So overall, that's exactly what I have for you here in regards to Tesla. If you like this video, consider liking, subscribing, and turning on that notification bell. If you want access to our platform, we are having a holiday sale, New Year 400, which gives you $400 off of our Mastering Stock Market course. We are going to increase prices at the beginning of the new year. It is a privilege and honor to serve you guys, and I will see you on the next one.